we all kind of felt like if you were to go for an Islamic bank, it was a downgrade compared to conventional services. What do you think caused that?
So I think it's correct. People might say to me, why do you benchmark to interest rates, right? But on the other side, they'll say, why are you more expensive than a conventional? So they want it both ways, right?
Why do returns seem to track the Bank of England base rate?
First of all, tracking is not the same as being an interest rate. The only way to properly fix this is to have a completely segregated system. Maybe the burden of that price has to be shared while we build the industry.
Yeah.
It's going to take time. Islamic banks in the UK, look at their history. Most of them will have had the majority of the time been run by non-Muslims. And so for me, Muslim or non-Muslim isn't the issue. What I want to see is that those people running the banks are believers in their own products.
In today's episode, it is my genuine pleasure to welcome one of the OGs of UK Islamic banking, Sultan Choudhury OBE. Sultan was one of the founding members and the CEO of Al Rayan Bank, formerly known as Islamic Bank of Britain. He has since gone on to be involved in numerous Islamic finance projects, including Offer Finance, Waqfinity, and National Zakat Foundation, all of which he is the chairman of. And he's even involved in companies as far away as Islamic Bank of Australia. Today, we'll be discussing the history and the future of Islamic banking in the Western world and beyond, where he thinks it may have gone wrong and how practitioners should be coming together to change the space forever. As always, I'm your host, Areeb Siddiqui, and this is Muslim Money Talk. Before we begin, we actually noticed only about 10% of you are subscribed to the podcast. So if you like what you're listening to and you want to hear more from us and see more things Muslim and money related, then please consider subscribing and of course leaving this episode a like and share it with your friends, leave us a comment or a review, because it really, really does help us out and help more people to find us. Thank you. Now back to the show. Sultan, assalamu alaikum and welcome to the show.
Walaikum salam. Great to be here in the comfy couch.
Yeah, we've used the studio a couple of times before. Haris Irfan. We had Eunice from Nesta here as well. Yeah. But yeah, it's a bit cozier than our usual studio. So hopefully the viewers appreciate it. Before we get into it completely, and I know you've done a few of these podcasts before, but do you remember how we first met?
I do. It's interesting. So we've got certainly your father and I have got a common friend who is James.
Oh yes, of course. Yeah, James Bagshaw.
James Bagshaw is the ex-CFO of Gatehouse. And he suggested, we're all chartered accountants, your dad, me, James. So he suggested we meet at Moorgate at Chartered Accountant House.
Yes.
He asked me to come and listen to an interesting project. So I turned up in the basement where this restaurant is. When I say basement, it's a little bit nicer than that.
Yes.
And there you were with Deng,
yes.
I think, James. I turned up with a colleague of mine and we kind of listened to your pitch. I remember giving you instant feedback.
You did.
Instant feedback. And it was that time in the industry where there was a lot of new startups.
Loads of us.
Particularly in the payment space. Right?
Yes.
Particularly in the payment space. And I gave a feedback. I think you took it away. You stayed in touch. I subsequently did become a small investor, shareholder.
Yeah, of course.
But it was really interesting because so many people in the high net worth space approached me and said, I've seen this pitch from Kestrl, I've seen this pitch from somebody else, What do you think? Can you advise me? And I said, well, show me everybody's numbers, and, show me their goals, and I'll just give you my views on it. And I remember there was one, and I won't name it, but they're not around anymore.
Yes, yeah.
Which was saying, we're going to take millions of customers in the UK, and we're going to have tens of millions of people in Indonesia.
Yeah, and capture all of mainland Europe.
in the payment space. And I said, look, you've got to be careful about these ambitions. Great, vision, huge long-term ambitions, great. But how are they going to get to the end of year one? How are they going to get to the end of year two? And I'm glad to say that, my advice was correct to that investor, who is also a shareholder of you.
Yeah.
Because, you ultimately judge people by the management and their ability to pivot when obstructions come, when obstacles arise, and get over it and come out with something that still works. And I think Kestrel's a very good example of that. So
We've had to, we were forced to. We were brought to the brink a few times, but we've pivoted away from that original digital banking idea. We went to personal finance. We found a cool niche in B2B, and now we're looking at getting back into the digital banking space as well.
It's a similar story at Offer as well. You know, I think it started off as a very much the Islamic version of a traditional bridging finance company, and now it's very much the fintech and exploring a huge amount of new products.
Yeah, and it was a pleasure to speak and visit your offices when we spoke with Sagir, I think 3 or 4 episodes ago, over in Solihull in Birmingham. So really cool venture, and a lot. We'll get more into it in this episode, I'm sure.
Of course.
Cool. So do you remember any of the advice that you gave me?
I do remember saying make sure it's SEIS or EIS.
Yes.
And I think you did that.
Yeah, we did.
I think we had a discussion on what was called advanced
assurance.
Share subscriptions or safe agreements, as they're now called.
Yeah.
And there was just a little bit about how converting the market research into growth in customer numbers, because that's the biggest value driver at that time for your business, which is B2C.
That was the big thing. You were very concerned about trust from the market and people's perspectives, and you also, I'll always remember you said you need to develop quite a thick skin in this industry. Absolutely. Which again I'm sure we'll come on to. All right, so casting your mind back, is this what you imagined you would be doing as a child? Did you have a concept of Islamic finance back then growing up in Birmingham, or did you kind of fall into it?
Yeah, so how far do you go back as a child? So let's go as far back as 16, shall we say, when you formulated some ideas.
Yeah.
Just before I was going to embark on my A-levels, that gap between GCSE and A-levels. And I thought I'd need to get a job. This is quite a big break, right? And in those days, we were reading physical press. I picked up the local Birmingham newspaper, looked in the classifieds, and there was a section where we're recruiting, come up to North Birmingham into West Birmingham, Handsworth.
Okay.
And I got the bus. Wasn't sure what they did, just thought they're recruiting. Got there, queue of people, gave you a clipboard, and you had to fill out a form. Basically your basic CV. And in one section on that form was, and remember this is before we had word processors en masse. Everybody, I've had a typewriter, you didn't, so you were handwriting your application forms. There was a section on this that said, "What are your ambitions?" And I said, "I want to be a CEO, probably of my own business." Well, I want to be a CEO. That was the primary thing. And I remember then going into the interview, and the guy said, "Look, you're the only guy out there that just says you want to be a CEO. So I'm gonna give you the job."
Really?
And the job was getting on a bus, going into what we call the Black Country, so like areas like Oldbury and Smethwick and Greater Birmingham, if you like, but it's called the Black Country locally, and selling imported faux leather folio folders and stationery and calculators and things. And we went around trading estates, knocking on the door, selling these wares. And I went along with an experienced salesman, somebody from London, and shadowed him for a day and went round all these places. And it was my first taste of sales, first taste of pounding the street, and literally pounding the street, going into doors, cold, selling a product that people didn't know anything about. You had to kind of sell its features, everything. I did it for all of a day or two. And then I said to my dad, who my cousin had a restaurant in Cornwall.
Okay.
I said, I think I'd like to go to Cornwall for the summer. So then there was a wedding that weekend. I went to the wedding. My cousin came up. I jumped in the car with him afterwards, and then left home for 12 weeks. So it was about 10 weeks.
To work at the restaurant?
I just worked in a restaurant and learned that trade. And again, all front of house.
Okay.
But that was more customer service, cross-selling additional dishes, and testing myself.
Yeah.
What level of tips could I, achieve? How good a service could I provide? How could I build a rapport? I remember some American guests came in, traveling around Cornwall, relatively young. They came in. They came in at lunchtime, served them, and I got £20 in 1989. £20 tips.
Okay, significant money.
It was a lot of money.
Yeah.
So, yeah.
Wow.
Yeah. you learn the trade and aspects of soft skills very, very early in your life.
What put you off of the original sales job? Because you were only there for a couple of days.
So you have to, and this will probably pop up later. You have to really believe in the product.
Okay.
So going around saying genuine Taiwanese leather as a euphemism for fake leather, and this is before faux leather became environmentally friendly or whatever, right?
That little sales angle.
Yeah. I really didn't like that aspect of sales. So sales, Islamically as well, and ethically, it should be very transparent. You should be highlighting the flaws as well as the benefits, and you should believe in what you are selling, right? Again, if you don't feel comfortable in doing that, or you certainly shouldn't feel comfortable in doing that, walk away and find something else.
Okay.
But nevertheless, the experience was valuable.
Stayed with you.
Yeah.
So 12 weeks in Cornwall restauranting, and then you went back to do your
my
A-levels, which were all, I'm guessing, like economics, finance, accounting.
Economics, chemistry, and mathematics.
Okay.
Yeah.
Okay. Nice one.
So I was good at chemistry and economics.
Yeah.
Maths is a kind of baseline subject, but economics is the one that really awakened my, I guess, awareness of how the world works. It's a great subject for that. People who are not familiar with economics don't realize what an academic subject it is.
Yeah, for sure.
And so people who go straight into economics at university often struggle, but an A-level is quite a good standard. So I do recommend that people, if they're going to go into economics, try and do it a bit earlier, because it's not, I guess it's always been confused with people saying it's business economics or home economics and all of that. And it's, at a young age, it was degrading the subject. But once you got into it, it's highly technical. It can be highly philosophical. It can be highly political.
Sure. Yeah,
it's a social science.
It's a real social science.
Yeah, it combines your mathematics and your ability to write essays and construct an argument. And
ultimately, it's about people. It's the psychology of it, I think.
It's one aspect of it. That's kind of microeconomics. But it's ultimately how you allocate scarce resources. Fundamental in business.
Okay. So you liked it enough, you went on to pursue it at university, after which you fell into audit and accounting. You became an auditor at Deloitte.
Yeah, so I mean, I did economics and econometrics. Yeah. My dissertation was on economic growth in Bangladesh, foreign aid. But that was what I landed on. My shortlist was Islamic economics.
Oh, so it was already there, inculcated.
And I guess foreign aid.
Yeah.
And it just happened to be my supervisor was more of an expert in foreign aid and developmental economics. So I ended up picking that. But of course, I'd investigated Islamic economics, so that stirring had begun.
Yeah. Was that just because you were a Muslim and you were trying to find, ally your faith with your studies, as many of us try to do?
So I think university is an important phase of discovery where you move away, especially at that time, from a cultural Islam where you essentially follow rituals and you learn Arabic and to recite Arabic as opposed to understand
it, as many of us do.
And yes, you get a sense of peace and whatnot, but you don't truly come into your own until you are on your own, and you're at university. And I think I remember I was probably feeling a bit homesick, and one Friday I just stumbled into the prayer room at Nottingham University, and I got a sense of peace. My friend circle started to develop around Muslims, and we started learning together, practicing together. And by year 3, the final year, I was thinking about, well, how does this impact my chosen topic, my economics? And so I started doing basic reading on it, but there wasn't a wealth of books in the library on it.
No. Horace's Heaven's Bankers hadn't come out for another few years.
Well, there were a lot of books from the Islamic Foundation in Markfield, but they were the early editions. You're talking early 91.
Okay.
So you'd have to go to Markfield to get them.
Fine.
So I did this. So I got the World Economy Journal Prize for my dissertation on foreign aid and growth in Bangladesh.
Was this before? Is it Grameen Bank?
Bangladesh? Yeah. Before that.
Okay.
I mean, the basic answer is foreign aid is not a major success factor in economic growth. there are other factors that stimulate economic growth. Yeah.
So you're a proponent of Trump cutting all the aid to
No,
as many countries as possible?
So no, foreign aid serves different purposes. So, it is alleviation, but does it generate long-term economic growth? The answer is not really. And secondly, there's something called leakage in aid, as we're all aware of.
Yeah.
How much aid reaches the end point. So I studied all of that stuff, got a prize, and that helped me obviously get a job at what was then a Big Six.
Big Six back then.
Big Six accounting firm.
Okay.
So I had 3 or 4 offers from the Six.
Yeah.
And I ended up going with Deloitte simply because they had the best pass rates in examinations at the time.
And was that in Birmingham?
Yes, I joined the Birmingham office.
Yeah, because what was Deloitte? Because I started out at Deloitte as well. That was where I did my grad scheme, 3 years there before moving on. What was it like at the time? Was it still... I loved it there. I found it like a really good training ground. It almost felt like university part 2 because you're with other young people who are studying for their exams and working together, and good place to make some money as well early on. How did you find your time there?
So I agree with the former. It's like a continuation of university. We have a lot of young people. You're studying together. You socialize together. You kind of develop quite strong bonds when you go on projects. The money was poor. I think the offer was £9,600, which was the lowest of the Big Six at the time. But by the time I joined, they'd leveled it to about 12 or 13,000. It was still a very low start. Even by then, by those standards in those days, where my friends from university were starting at 20 or 24 or 18.
That kind of difference.
But that's and to be honest, that's still always been my approach. I try and look at the long term and the development more than the immediate remuneration. Certainly, when you earlier in your career, you should do that. It's work to learn, not to earn. That's a very famous phrase from Rich Dad Poor Dad. Before I knew the phrase, I was actually doing that, and if I think about the 3 or 4 years I spent there, the exposure to so many companies, the insight that I got from talking to the CFOs and sometimes the managing directors of those companies across a range of industries, from especially if you're in Birmingham, you get a range of industries. So I was in the pensions expert team, but I also did mortgage books. At the same time, I was doing manufacturing companies, and I was doing, super warehouses that were freezers, actually. They were freezers.
For the supermarket.
Yeah, and they were stocking, talking multiple football pitch length warehouses that were freezers. Right. And you would, to do the stock take,
you'd have to go and do the LIFO.
You would put on a big coat, gloves, and then you would randomly select what to measure, and it would usually be what's called intervention beef.
Okay.
From Europe, the old beef mountain, or the there's these overstocks, and you'd go there and it's just this 5-year-old beef. It's still there.
That's quite cool. Do you think this is still? I think for our younger listeners and viewers, a lot of them write in or message saying, what should they be doing? What should they be doing at university? Should they even still be going to university? Should they start out, and should it be in financial services? A lot of them are attracted towards tech and software and engineering jobs these days. Do you think this is still a viable career path for young people today?
I think it is, because it's the knowledge industry. It's still a knowledge industry. I don't think in terms of the lower order stuff, like pure accounts prep, bookkeeping and, filing invoices, purchase ledger, sales ledger, that stuff is it has been overtaken by tech. Yeah. But that's not the point. The point is actually understanding a business model. And when you look at a balance sheet, when you look at P&L, when you look at a cash flow, you really deeply understand how the business model works. What's driving the revenue? What's driving the cost base? How is the margin being made in that business? What are its risks? Yeah. And so financial understanding, I think, is critical to developing a business. I'll give you an example. My father was a great entrepreneur. He opened restaurants. I think like the second restaurant in North Wales, the second one in Walsall, the first one in that part of North Cornwall. He was an entrepreneur, but he was never great with financial management. And I think if he had some of those financial skills, I think his businesses would have been a lot more stable. So we were always very feast and famine.
Right.
You know,
Okay.
typical entrepreneurs' children.
Yeah. Of course.
Sometimes we had money, sometimes we didn't. You know, and it was famine.
Yeah.
Mum, on the other hand, was, you know, the stability factor. Yeah.
Because she went on to become like a lecturer, or am I remembering?
So no,
right?
mum and dad got married during the War of Independence, as we call it in Bangladesh, from
70s.
Pakistan. Yeah. And so her education got disrupted. So she couldn't finish the equivalent of GCSE's metric. So she came over shortly after I was born. And so again, that obviously having a young child, and my brother was born subsequently, was an obstacle as well. But she kind of, she's very much a self-starter. Both my father and mother were self-starters. And she quickly educated herself. So she did a diploma at the local polytechnic. She did her NVQs.
Wow.
She became a classroom assistant. She started learning Arabic. She became a community person in the women from Pakistan and Bangladesh in particular.
Yeah.
So social worker, if you like. Finished off as a classroom assistant. Taught many people. Some of those people actually ended up working for me at the bank, who I had no idea that they knew my mother. So my mother had a different surname.
Yeah.
And it was
incredible.
It was interesting.
Yeah, no, it sounds like she had a real impact on you as a child and growing up, and to this day.
Yeah, and the education. I think both mum and dad were keen on education, but mum was really the pious one, you might say, and her family background was one of piety, and very, very strong on making sure that Islam was embedded in, you know, our upbringing, and I think that certainly has always been an undertone to anything I've done.
Mashallah, may Allah reward her and your father as well. So Deloitte, I know you did some time at Charles Schwab as well after that. But then, interestingly, I think a VC reached out, was it, saying they wanted to set up this Islamic bank in the UK.
Yeah.
Is that the story?
So I guess just to bring the story up to speed, so Deloitte was great for exposure and technical knowledge, but it's not, you don't really learn true management because you're just looking after clients, and it's kind of project based, as you know, you've worked there. Charles Schwab was a real revelation because it was California. California, I think, has overtaken. I think it's the sixth biggest economy or something now in its own right.
Just on its own, yeah. Yeah, that's right.
And it's because of some of the stuff, some of the culture that I witnessed. Charles Schwab was very innovative. It wasn't like working at a bank. I was doing an assignment there, actually a consultancy assignment. And I just saw the culture, very innovative, putting a priority on ideas, doing things better, new products. It's not about the hours you do. It's really about what you come up with. They encourage you to don't work on the weekend, right? Take some time off. Do something else as well.
Really?
It keeps you fresh.
Was this
keeps you creative.
or during the .com
This
bubble?
is so it was the 98, I think I joined.
Okay.
So it's before the crash in the .com bubble.
Yeah.
And they became the largest online stockbroker in the UK.
Yeah.
And you could see why. And they were also growing very fast in California, out of California, in America. And that really, I guess, informed my managerial skills. So what many people see in fintech today was already happening at Schwab. It was already dressed down.
Yeah.
It was already about creativity and innovation. Having said that, it was the blend with the discipline of financial services and, you know, performance, making sure we could deliver performance as well, because they were accountable to the market, and the market is everything over there. It wasn't just about a bunch of creatives sitting in a room, you know, chewing the fat. Absolutely not. It was still delivering on business goals.
Thank you for listening to Muslim Money Talk. If you like what you've heard so far, you might be interested in checking out what we do at Kestrl, the Muslim Money app. Kestrl is a service that helps Muslims who want to grow their wealth without having to compromise, whether it's on their belief or user experience or price. I founded Kestrl because of how fed up I was at how poor Islamic financial services were in this country. Often people didn't use them because of how bad the user experience or customer service, and indeed how high on price they were. So Kestrl was the answer to that. If you download the Kestrl app today, it can help you by creating a budgeting plan. Plug in whatever bank account you have and it will create a auto budget just for you. You can then tell us what goals you're saving for and we'll save towards them automatically into pots, and then crucially link you towards Sharia compliant investment and savings products as well. So download Kestrl today and try it out for yourself. Now back to the podcast. And it wasn't growth at all costs, which I think a lot of fintechs began to adopt in the 2010s. It's like, let's split scale, let's worry about making money after. Yeah. It's like, okay, let's focus on the margins.
You had to make money.
For sure.
And so I felt that I was managing my career. So I had the technical base, the accountancy. I did my MBA as well.
Oh, at Aston.
At Aston whilst I was working. And you put that together, I felt I was ready for another challenge. And I think the other thing to note was I was a restructurer. I was making people redundant by the end of it. It was the dot-com bubble burst.
Yeah.
It was all about restructuring and problem solving and troubleshooting. And I really wanted to build again, create again, as it were. And so this opportunity came. It was venture capitalists out of Bahrain, wanted to set up the first Islamic bank. I thought, hang on, I remember that Islamic economic stuff. I'd carried on my interest in it. And myself and the late Azhar Khan, we were working together. We worked together. We studied together in many, many places, and we both thought, let's be proactive about this. So we started shooting off emails to people we'd heard, were involved. They kind of referred us to this recruitment agency in Birmingham. But interestingly, they were setting up in Birmingham.
Why was that? Was it like a Muslim hub or?
Well, it's really interesting. I mean, at one level, you might say it's fate, it's kismet. I'm in Birmingham. This is in Birmingham. Why would it happen this way?
Yeah.
And but actually, I think what it was is cost dynamics, right? If you run your back office in London and you don't want to offshore it, you want to onshore it somewhere in the UK. Birmingham's got the biggest Muslim population outside of London.
It makes sense.
Yeah, but it's also got quite a vibrant financial services sector. You know, it's where Lloyds Bank started. It's where HSBC's predecessor, the Midlands Bank, started. There's a lot of financial services there, and so I was there. We were stockbroking. A lot of stockbrokers were there as well. So that was the reason. It was just the board had decided independently of me we were going to have a back office in Birmingham.
And what was the vibe back then? Because it wasn't just the first Islamic bank in the UK. I think it was the first new retail bank in a few decades in the UK, was it not?
Yeah. I mean, I think as a high street bank, there hadn't been one for about 20 years, I think, if not longer. But I mean, the problem was, even though that was the case, so it's exciting building a bank, there was the shadow of BCCI and its collapse.
Yeah.
Just prior as well.
I wanted to ask you about that because Mohammed Paracha referenced it as well and said that it was kind of this cloud looming over the Islamic Bank of Britain project where some of the goodwill from the public had been taken away by this collapse.
I think there's a salutary lesson there about an industry, and in this case, BCCI was not an Islamic bank, but it was serving a similar demographic, but it wasn't Islamic.
It was Pakistani.
Right? Yeah. I mean, it had a lot of East African influence as well. But the salutary lesson is it's not. It's at one level, competition's good, but not to the degree that I want my competition to fail, because it damages the whole industry. So, as a salutary lesson for now, we don't want any of the players today to really fail.
Absolutely.
Right? Because we want everybody to be strong. Because if one fails, everybody doubts the other one. We're all relatively small.
We saw the repercussions of that when we were fundraising in the early 2020s. And there were loads of Islamic digital banks trying to launch at the time. Many of them didn't work out for one reason or another. And constantly in pitch meetings, when it came to our second round, people would say, okay, well, didn't work for them. These are three people it didn't work out for. That was just like a real a real blow whenever we walked into the room. We were already on the back foot. So no, absolutely, I agree with that.
I mean, that's affected us more recently. I mean, I was interested in not that long ago, a few years ago, in about 3-4 years ago, in acquiring a bank, but investor sentiment collapsed because of Silicon Valley Bank.
Oh, of course.
Yeah. So it still applies today.
For sure.
And we spent a lot of money. We were on the verge of acquiring a bank, and bang, investor sentiment collapsed. So it does apply today. So anyway, coming back to Islamic Bank of Britain, there were a number of challenges. Having said that, and because it was called Islamic Bank of Britain, it gave me some antidote to BCCI, because it was like, what is Islamic banking? So you're opening up an educational dialogue, and you're having to educate right from scratch, because people brought up here up to that generation were taking conventional banking, conventional products. And they kind of had a vague idea that interest was wrong, but we're in the UK, the first generation immigrants or early second generation. It just wasn't. It wasn't front of mind until you make the case, until you highlight the ayah in the Quran, until you go out there and start saying, look, there is a different way. And so, being called Islamic Bank of Britain, which some people might say was a hindrance, but it wasn't. Because if you look at the fastest growth in terms of customer acquisition, if you just shape that curve, it was in the first 2 years when it was called Islamic Bank of Britain. And it was, I mean, we had, maybe we went too much on the Arabic, certainly I would say, but we were using a calligraphic theme. And,
I remember the card.
Even our cards had Islamic calligraphy, but it was designed in an abstract way. But the point was, and I do remember people would come to me and say, look, I opened an account. And I said, well, you've opened an account, but you haven't put a lot of money in. He goes, no, but I want the badge. I want to pull out your debit card, your plastic, when I go to the restaurant in front of my friends. I'm paying for it.
So it was the
Islamic Bank
effect.
of...
Yeah.
I'm paying with an Islamic card, Islamic Bank of Britain card. I'm reinforcing my Muslim credentials.
Sure.
And so it was quite important. Having said that, there's a natural cap to that approach. So you're getting that core market who are interested. And instead of focusing on share of wallet, which I think, unfortunately, the original business plan there was much more about growth, not profitability and share of wallet. Classic. And I see all these circles, and you mentioned 2010. I mean, this was earlier than that, right? Yeah. So you kind of see that. And when I achieved a board position in 2007,
sure.
I was commercial director. I quickly changed that. I said, well, look, the original business plan said 350,000 Muslims are going to just walk through the door the moment we open a branch and call it Islamic. That will get them interested. That might get them signed up. But will it get them will it get us a share of wallet? Because they've still got this BCCI thing. They're not going to risk their hard-earned savings. So we had started with a current account as well, and that was probably another issue. And the asset side, i.e. the side that makes you money, we had gone into personal finance, something no one does today.
Yeah.
Because of the Consumer Credit Act. And the first phase of that actually led to quite a lot of arrears and defaults.
I can imagine.
And I just remember asking a customer who defaulted, why did you default on us? And not NatWest, because you got a NatWest card as well, right? I think he goes, well, you're the Islamic guys. You'll be more compassionate. And so,
really,
yeah, and actually, and in personal finance generally, you're going to protect your home first, and you're going to default on your credit card or your personal finance. That's a well-known feature. So we tightened up the credit criteria. The second phase of that product was actually very good credit, but then we were selling Bank of Ireland's Al Barak, as it was called, Al Barak's home purchase plans, not our own. And this is where I was a proponent of we need to do our own. So I guess when I got onto the board, we then quickly launched our own home finance. It was not regulated at the time, and also the first buy-to-let product, which is what we're doing at Offer. So it's kind of come home.
The story continues.
Yeah, so we're doing buy-to-let.
So this was the first Sharia-compliant buy-to-let product in the UK.
And we launched the first savings accounts, the first deposit protected savings accounts.
Yeah, I think my dad was one of your first customers. Yeah,
and that was a remarkable achievement as well. And I changed the structure. We kept the current accounts through the branches in particular, albeit we then added telephone banking and digital apps. But the key thing was people are more likely to give me a bit of a savings. They're not going to move all their transactional accounting from Santander or whatever.
Yes.
So but will they give me some savings? Will they? Because many people in my generation, the second generation immigrants, were taking no interest. So I'd have a savings account, I'd take no interest.
It's the same in today's generation.
But actually, and if you talk to Rizwan at RFF, and obviously I also understood this once I was running my own bank, as it was, and when I was running a bank, is actually I'm just giving them more ability to make riba by not taking the riba. And we can talk about this, it's quite interesting. So just coming back to it, so I said, let's get people to give us something, build their confidence in the bank. And then once we launch other products, we will have built up a balance sheet to fund those other products.
And that something was the return in the savings account.
Yeah. So I think the other thing was the technology. A lot of the issues with banks, the older banks, not the Monzos and the Starlings, but the traditional banks, is what do they do at the board level? They tend to hire older retired bankers. So then the cycle of innovation often gets stuck. So let me give you an example. One of the things that I had to do, we were making lots of losses post-crash. So this is not the dot-com crash now. It's the financial crash, the Lehman Brothers crash. And I had to restructure the bank. So I maintained what we call our capital expenditure, our tech spend, but just tightened my operating expenses, tightened my belt for consumption expenses. Because you have to have a future. You've got to still invest in something for the future. And what we did was we were one of the first banks to really invest in the cloud. We use Salesforce, as it happened. It could be any CRM, but Salesforce were one of the leaders in the clouds, and they were an up-and-coming company.
Yeah.
And we built our mortgage product on there. So, our home finance, the Islamic mortgage product, the home finance product. It wasn't called HPP at the time, it was just called home finance. HPP came out when it became regulated. This was roughly around the same time. And most importantly, we put our savings products on the Salesforce platform and then on through the money supermarkets instead of doing it through a third party, which is the most common way of doing it now. So I saved a lot of cost by doing it in-house development on a CRM system into the cloud. Now, imagine if I went to a board back in the early 2000s and said, I want to put all our systems on the cloud. I mean, it's just a flat rejection, because it's like, it's too risky, it's the data, the this, the that.
Yeah.
One of the hallmarks of our transformation was when my chairman was not a banker. So I'm the CEO of a bank. There were bankers on the board, but the chairman was not a banker. It was from the Qatar Investment Authority.
Okay.
He was also the COO of Harrods, and he was also on the board of Volkswagen, Audi, Porsche.
So he was a bigger risk taker.
Not a risk taker, but he just had a broader perspective that actually the future is going to be different. Banking is going to be different.
Sure.
And so it was remarkable. We had almost a bank every month visit us for our deployment into the cloud. Salesforce were inviting us to California to present, here's a bank that does cashiering in its branches in the cloud.
Yeah. Well, Sultan, the picture you're painting is of a very innovative young bank of young Muslims who want to try and change this for the better. But I think on the other side of it, and it was, I think, more what my generation experienced, where we saw not just IBB, Arayan, and some of the other banks as a bit more behind the curve when it came to digitization, customer service, that sort of thing. And for me and my brothers, my friends, we all kind of felt like if you were to go for an Islamic bank, it was a downgrade compared to conventional services, mainly in the user experience space. What do you think caused that?
So I think it's correct. And the reason is, so I said I maintained my CapEx, but relatively it was quite small. Right, relatively,
of course,
and it wasn't the plug and play modular systems that you have now.
Yeah,
you were coding from scratch, and the third party software vendors at the time were charging a lot of money. So costs were significantly higher. That's why I went in-house. If I could have just bought one off the shelf, it would have probably cost me probably 5 to 10 times more.
Really?
So I just built it on a cloud-based platform.
Wow.
So you do workflows and you build it and you build it into, call them APIs now, but the integrations into our core banking, which is quite an old legacy system. And you're up against people who are experiencing, I don't know, a big 4, big 6 bank level of technology. And we are just like you guys, a handful of people putting it together on the cloud before all these tools were out there, these developer kits, modular systems. We were doing it from scratch. Frankly, I had a very, very strict CapEx budget every year. And some of it had to go on computers for the staff and some of it went on just developing stuff. And so I think this is a kind of prevailing issue that I find in the industry. The comparison is against conventional. Yeah. Okay? It's natural. But it kind of sometimes doesn't work both ways. And what I mean by that is people might say to me, and I'm sure we'll come on to these sort of questions.
We will.
Why do you benchmark to interest rates, right? So, and then on the other side, they'll say, I'm not going to go into the answer.
Yeah.
But on the other side, they'll say, why are you more expensive than a conventional? So they want it both ways, right? They don't want you to match conventional on the one hand, but on the other hand, they compare you to conventional. So either we have to say we're completely, separate and distinct from the conventional. So it's as different from, I don't know, fruit and meat, and you wouldn't compare the two. Or you're saying, actually, it's food, and we do compare the two, right? In that equivalence.
Sure.
And so we can dive into it,
which we will come to, because for the first time, this is a new segment of the show that we're calling Halal Google or Haloogle autocomplete interview, where we're going to have Sultan try this out for the first time, this format, where we're going to hand him this card of your most asked questions around Islamic finance. So if you hold that there,
right, I
think that will appear on camera.
So if I go to just peel something off.
Yeah, so you'll peel it. So you can see here, these are the most asked questions around Islamic finance. They start off as, we've covered up some of them, but we'll do it one by one from the top.
So go for it?
Yeah, if you go for it, if you hold it a little bit.
This is from, you call him Halal
Google.
I call him Sheikh Choudhury.
Sheikh Choudhury.
I'm taking it from Sheikh Choudhury.
Let's try that, yeah. It's
here we go.
Blue tacked on, so yeah, there you go.
Sheikh Choudhury.
So if you hold that one up.
Why are
Islamic mortgages so much more expensive?
Yeah. So it comes back, first of all, we are comparing, to conventional. Okay. And we have to then, if you're going to do that, then we have to look at the structure of conventional versus the structure of Islamic in terms of the life cycle of the industry. So your big banks, your Lloyds, your NatWest, or even your established building societies have been around for hundreds of years, right? Since the empire took off. And so they've built up, economies of scale at one level, right? Where they can get a low operational cost. But that is not the primary driver. It is a driver. But they also get a lower cost of funds. Okay? So what do I mean by all of that? You go for a home purchase plan, you get a price. Let's equate that rent to a rate, just for comparison purposes. Say you're paying 6% in halal, in the halal product, and you're paying 4% with, I don't know, Halifax or somebody like that. What's the main driver? So first of all, this is where your financial skills come in, right? Go into their accounts and work out what's their spread. That's the difference between what they get from customers and what they pay to their funders. What is their spread?
And how much they effectively keep for themselves.
For Muslim organizations, we call that the net profit margin, right? This is before your overheads, right? So overheads is a factor, like I just said. We don't have economies of scale. But let's just stop before that. You'll find most Islamic banks do not make more money than their conventional counterparts. So what's that telling you? It's telling you that it isn't about somebody exploiting you to make more profits. The Islamic bank is not making more profits from you. So their spread, the difference between their cost of funds and their price that they're offering the product to you is smaller.
Smaller. So the margin's actually
the
smaller.
margins are smaller.
Fine.
So first of all, that's okay. They're making less money from me. So then you have to look at the cost factors. It must be coming in on the cost side. So let's look at the cost of funds. There's, I guess, a range of reasons. First of all, let's just go for the specific reason. Where's my cost of funds, an Islamic bank or an Islamic finance provider? So an Islamic bank, as you will note, generally are towards the top of the rate tables
For
on the savings accounts.
Yeah, for savings accounts. I think they're paying something like 4.5 to 5% today. Yeah.
So what's the impact of that? Add their spread, even if it's lower than the conventional, out pops a higher price on the home finance side. So if Muslims were prepared to put into an Islamic bank at a lower rate, you'd get a lower home finance price. That's one.
Okay.
Secondly, it's the availability and diversity of funding. So people simplistically will say, my funding is for my deposit accounts. And that's the average price of my deposit account. What I pay to savers drives the cost of funding. But actually, there are other sources of funding. So sukuks, what we call in the capital markets. So you might go into a sukuk on your home finance book, and you might be able to reduce the cost just if the capital markets are paying or expecting less than the retail markets.
Sure.
And then there's corporate deposits where local authorities will put money in, providing your credit rating. Right, so you can diversify, and then there's what we call interbank.
The interbank, where Islamic banks lending
essentially
to each other and
finance each other when they have shortfalls, or one's long, one's short, whatever. Right. So the diversity doesn't exist for smaller players. You're either using wholesale funding, what we call the equivalent of warehouse lines, or investments, like peer-to-peer.
Yeah.
Or you're a bank and you're largely reliant on your deposits, all of which are more expensive than their conventional counterparts. And then you have to go into the investment mindset. Why does an investor want more?
Yeah.
Because Sharia carries a premium in the capital markets. Secondly, Islamic is a very small proportion of the whole market, which means hard to impact the whole of the market. You're going to be impacted. Think about equilibrium. Equilibrium is the total, the equilibrium of the total cost of funds from people who demand funds and people who provide funds.
So in terms of solutioning for this, in terms of economies of scale, I think we could get there, right? Especially with technology. With technology, digitization, becoming a digital bank. In terms of the actual availability of capital, increasing the amount of sukuk that's available in the world, or imagine the deposits increase. People just put more and more deposits into an Islamic institution, and perhaps they forgo a bit of the return, and the returns are more in line with a conventional player. Do you think that would help a long way? Would that go a long way in bringing the cost of these mortgages down?
Yes, because just imagine everybody wanted to put their equivalent of savings investable amounts into Islamic products. Well, then if I'm an asset manager, what am I going to do with all this cash? At the moment, it's literally such a small percentage of people's savings that goes into Islamic. But if everybody said, we're all going to put all our savings on our spare liquidity into Islamic investments and Islamic savings, the asset managers will then be saying, I've got to get this out.
You have to do something.
Yeah. So either they're going to drop the rate so that the cost of funds goes down. And then secondly, that means they'll get it out to people who need funding, like people like Offer, and some of the other players in the market who want the funding, who are trying to get out cheaper products. Okay. So when people say that to me, I'll say, "Where's your savings? Where's your savings, bro?" I've got, I'm quite Islamic. I've got it with so and so bank. I said, did you get a good rate from them compared to what Halifax are charging? Yeah. There's your answer, really, in a nutshell. In a layman's terms, there's your answer.
So why aren't banks doing this more often? Like, why aren't the Islamic banks putting a call out like, come on, please put more and more of your deposits and your funding into the savings accounts. Let's bring it down. Why isn't there more of a concerted effort?
So the more, so we're going into banking now, so as
Yeah.
opposed to what Offer might be able to do,
Sure.
for example, or a finance house,
Sure.
like a Nesta or a Strider, whatever, right? The more deposits you take, because it's a balance sheet,
Yeah.
deposit to liability, because you owe that back to the saver. You have to put it somewhere, don't you? Because balance sheet
Yeah, of
equals. So it can't just sit as cash. If it does, you've got to place it somewhere. You can't just, it doesn't, so you say you place it in the Bank of England because of alternative liquidity facility, or you place it previously with Sukuk if you want to get a higher yield. That has a capital weighting. All assets have a capital weighting. If you've got a capital weighting, it means I need more regulatory capital. It means I need more shareholders. I need more equity. So there's a natural leveling off until the bank makes enough profits to increase its capital. So it's getting a little bit technical now, but the bottom line is that it's linked to the equity piece.
Okay.
So the banks today won't do that. And then if they went out and got £1 billion of capital, they'd be like, well, actually, it's going to take me time to deploy the level of balance sheet
To find the house.
and so the returns go down.
For sure.
So
Okay. But it sounds like it's solvable is the main point I want to
it's solvable by scale and, I guess, industry aggregation over time.
Yeah.
It really needs that education awareness and everybody to start believing
and supporting. Their initiatives.
Yeah.
So please support Islamic fintechs, all the people you've seen on this show. Please give it a go. All right, on to the second one.
Yeah.
So let's peel
What
that
do we got?
away.
Do you want to go? So let me peel it away and
Peel that one away.
read it so I'm not reading backwards.
Here we go.
You got highly effective blue tack here.
If you lift it up so the camera can see.
Do you want to read it?
Why do returns seem to track the Bank of England base rate?
Yeah, so I kind of touched on this.
Did, yeah.
So I won't go too long into this one, so we can cover some of the others. First of all, tracking is not the same as being an interest rate, and I think many people have established that. If I'm following something, it's not the same as being something. So contractually, I'm not doing interest, but why am I tracking it? People always ask that. So it goes back to this kind of long explanation I've given. What is a good proxy for the cost of funds? What is a good proxy for the cost of funds? Well, because the whole system is based on interest, an Islamic might be weighted at 1 or 2%. The cost of funds, irrespective of is it based on profit or is it based on interest, the cost of funds, i.e. what investors require, is going to be broadly follow an equilibrium. So it will coalesce to what the majority of cost of funds do. But people don't ask me that questions as often as maybe they'll say, why don't you follow the market rent, which is the corollary of this.
Yeah.
So if I'm on the street, why isn't it, those guys pay £1,400 a month rent on this house.
Yeah.
Why doesn't it follow the market rent? You could establish that with tech these days, right?
And it'd be different area by area, yeah.
So imagine you were a shopkeeper and you sold your goods by reference to the sales price, but with no reference to how much those goods cost you. So I don't know, I'm selling a football and the going price for footballs is £5. And I have to sell it at £5. But what if it's costing me 10?
There you go.
I'd stop selling it. I'd stop selling it, right?
Yeah.
So it's not reasonable to ask any business. And, Islamically, the Prophet ﷺ was a trader. You buy at one price, you sell at another price.
Sure.
So if I'm buying at a price, my cost of funds is at one price. I have to look at it that way. And secondly, by the way, the market rents are often higher than the cost of finance.
Yes. Yeah, of course.
So it's worse for consumers.
I guess the distinction is, why is the cost that you buy at linked to interest in itself? And that's because it's part of the wider system that we just live in. There's nothing we could really do about that.
Well, not necessarily. It just happens to be that the cost of funds. So just let's go back to that. Muslim is interested in putting savings into a bank account.
Yeah.
And this is my earlier point. They will always compare it to what the conventional's providing. So, yeah, so-and-so bank, Islamic Bank, is providing 4%. And I don't know, HSBC is doing 2%. They're comparing it, right? So it's positive. So, and if interest rates in the economy go down, right, and HSBC are now giving you 1.5%, typically you see people drop the rates even on the Islamic side. Yeah, because their cost of funds has changed. So the only way to properly fix this is to have a completely segregated system, and what you do get that. So you've got, we had in the old days the Ansar Finance, to a degree you got FIDA as well, where you're getting a deposit at a percentage, and it's a circular closed system, and then you're putting it out to other people. And the difficulty is scaling up. The difficulty is scaling up because
getting that capital.
Because even the people who might be putting money in to those companies, they will just be comparing their rate of return to what they might get elsewhere, and it may not even just be a conventional. It might be compared to I don't know what a curate might be giving, or somebody else might be giving. And so the problem is you've always got that comparison. It's not a self-sealed system like in central heating,
Yeah.
Right?
Understood. Okay. I think the next one's probably going to be similar-ish. But let's
have a look.
Let's remove that.
I might just remove it and then read them out.
Remove it and then we'll hold it up.
Is this just interest by another name? So the answer is emphatically no, because the definition of the interest is through the contract, which has been certified by the scholars. So it's that contractual relationship between the person taking finance and the person giving finance, or the entity giving finance.
Yeah.
Is governed by the contract, and it's really important that contract does not embody riba. And how do we know that? Yes, we have got principles, but we're practitioners. I have to get it referenced to scholars, and often very eminent scholars, right? Yeah. Who have looked at these things, and we know there's a wide body of opinions, but the reality is you've got the majority of scholars in terms of places like that support AOFI and Majma Fiqh Islami and all of that. They've kind of accepted this, but I kind of that these arguments don't actually bear that much weight when I'm, shall we say, with the layman in the high street, pounding the street. One of the things you got to look at is, are these reputable scholars who've approved it? There'll be scholars who say they're not. There'll be other scholars who say take interest-based mortgages because of Zuria, all of that. But part of it is your peace of mind and your spirituality, isn't it? And there's almost like a risk transference. These scholars have allowed it. They are reputable. There's a wide acceptance. So even if you had some doubts, and many people do, should you operate on that? Because given that you're not a scholar, you're muqallid, you're blind to a degree, in the sense that you don't have the qualification. So you submit your opinion to the opinion of somebody else, and if that person got it wrong, are you blameful? You have to kind of almost think about it like that.
Yeah.
And then probably you're not blameful, because in good faith, you reviewed the fatwa certificate, you looked at the product, you tried to understand what it's based on, and you went for it. And fatwa are contextual, so something that may apply in this country may not apply in another country.
Exactly.
And that's another thing that people often forget.
And not just country, but also time.
Yeah, and in the time you're in.
Yeah,
so when there was no Islamic, equivalent to mortgages, then Zururia might have been a compelling argument.
Yeah.
Where you've got now maybe 6-7 providers of home finance, is that really
That's
applicable?
the thing, right? Because I think what a lot of people, and we talk to a lot of customers of home finance and people who are considering it, they go through this and they usually come across a fatwa. I think there was one which was given a couple of decades ago saying the Zururia, for necessity for your first home which you're going to live in, you can take a conventional mortgage. So they think about that and they're like, okay, but is my intention really that I'm doing this out of necessity, or is it because I just want a cheaper mortgage?
Exactly.
That's the thing. And what is my real intention there? And I think that's what weighs on a lot of people. And then they see all these different home purchase plans on the market, which are Sharia compliant. So they're like, okay, so how many people are not abiding by that fatwa to the point that they're actually using these products, because they do exist, so people must be buying them. And I think that's the conflict that exists. And I'm a big believer having said all that, I'm a really big believer in we just need to make a good product for people to remove that choice and that conflict from them. So on the one hand, it's digital convenience and customer service and excellence, and that's really what we're focusing on at Kestrl. But on the other hand, it's the price perspective as well.
So the first point, wholeheartedly agree. It's what offers focused on completely.
Yeah.
So you've got the team that did the first buy-to-let, but we're doing it again now. Yes, there was some cumbersome elements of the first iteration, but that knowledge has come through in the second iteration to make it one of the slickest processes. I think Sagira explained a lot of our applicants don't have to provide a single piece of paper to get a home finance. That's £250,000, £300,000. That's amazing, right? And very quickly as well.
Not just amazing for Islamic, but amazing in general.
Yeah, so that covers your first point. Wholeheartedly agree. That's something in our gift.
Yeah.
But price, and this is what I might say to the layman, if and most of them, some of them have business or understand business, would you consistently, in the long term, sell something at a loss? Would you expect somebody to do that? And if they prove to you that they're making less money than those guys, then maybe the burden of that price has to be shared while we build the industry.
Yeah.
It's going to take time.
It will take time. And I think it just feels like it's been going on for a while now. So how much more time?
Yeah, and that, look, truly, you need somebody to do something big. Combine these balance sheets. Of all the balance sheets, are all literally a drop in the ocean. Of the British Islamic banks and the
compared to the big conventional.
Yeah, I mean, you've got to really be breaking. You've got to really get into 20 billion as a balance sheet. Where I can really start making those waves, and that's that. And how do we get there? Well, everybody's got to get in there.
Which I think you've answered most of the other questions now, but we'll just peel them off.
We'll just peel them off
for the sake of it. So
the next one is some fatwas.
Yeah, how do we deal with conflicting fatwas?
Let me have a look.
What's the idea?
Some fatwas say conventional mortgages are okay. We've covered that one.
Yeah.
The next one. So this was
an interesting one.
Why are so many Islamic banks
run by non-Muslims?
I'll tackle that. And let's just go for them all. So how can Islamic finance
ever truly compete?
Okay.
With conventional.
Talked about that to a degree, right? It's a really interesting one, the non-Muslim one. If you look at, let's take the top 4 Islamic banks in the UK, look at their history. If you made it cumulative, for the largest part of time, most of them will have had the majority of the time been run by non-Muslims. Maybe Al Ryan, it's probably 50-50 because of my tenure there. But that happens to be the actual fact in the industry. There's 2 ways I look at it. At one level, it's if that person running the bank is the most qualified person, can really generate some of those objectives that you talked about. Slick, high technology, lower cost of funds, better priced products. Well, Muslims deserve the best person, whether that person serving them is Muslim or not.
True.
That's one level. The other way to look at it, though, is if the guy who runs BMW drove a Mercedes, what would you think? Right? What would you think? You would lose some trust in you would lose some trust in that product.
Yeah.
And for me, it's not whether it's about a Muslim or a non-Muslim. It's important that the person running that institution is a firm believer in the products that they're selling. Are they able to come on your podcast and truly present their belief in these products in a sincere and authentic way, and that they use them themselves? And so, if for me, Muslim or non-Muslim isn't the issue. It's what I want to see is that those people running the banks are believers in their own products
and ascribe to the same value.
Because it's and maybe it's not their faith, but the ethical. All these banks say their products are ethical.
Yeah.
So you need to be making the case by example, making sure that you're taking those products and you can sell it, you can explain it, that ethical nature. And so that's not my challenge. I'm not making a judgment on any of them. They may be taking their own products, and maybe that but that's the challenge. That's what I look for as a consumer. I like authenticity in anybody I deal with.
True. Yeah.
In any product that I buy.
Yeah, and a
Yeah.
quick shout out to James Bagshaw,
Yeah.
who's again one of the shareholders here at Kestrl, in that he's not a Muslim, but he's a full believer
Absolutely.
in Islamic finance as a truly ethical alternative to conventional financial services, and there are quite a few people like that out there.
There's Richard as well, Richard
Yeah.
Thomas, and there's a lot of Stella. I mean, look, that's what I'm saying. There's plenty of examples of non-Muslims,
Yeah, in the space.
right?
Yeah.
It's not about Muslim or non-Muslim. And I remember there's a really good little anecdote to finish, maybe to finish or not finish, depends. We got invited to Radio 2, Simon Mayo's show,
Okay.
right, to talk about Islamic finance. I mean,
When was this?
this is probably 2015, 16.
Okay.
Something like that. And I sent my head of marketing, Tim Sinclair. So there you've got this show, popular culture.
Yeah.
It's not highbrow. It's not Chat Radio 4, right? It's Radio 2. Simon Mayo, famous broadcaster.
Yeah.
And then Tim Sinclair, local of Warwickshire, comes into the studio and starts talking eloquently and beautifully about Islamic finance. And that for me is a piece of art, right?
Wow.
You've got a non-Muslim talking to another non-Muslim, and he is articulating and explaining Islamic finance and why it's good for society, why it's ethical, why it's a great product.
Incredible.
And that's what we've got. Well, that's what we've got to achieve, right? That's what we've got to achieve.
Yeah, for sure. I think that's ultimately how we do this. We're running quite short on time, but I think just to kind of tie this off, is there a need for a new Islamic bank in this country to solve these problems? How do we go about it? Is it a new bank? Is it the fintechs working together, partnering with banks? How do we do this?
I've mentioned that there will be a time where we're going to have to see some aggregation, some coming together of some of the players. In the meantime, the market's big enough that people like Offer, whilst we're competing with our friends at Nesta and Strider and Fider, we're also collaborating. There's plenty of space. We need to be collaborating to push the message. We want the industry to be strong.
That's it.
Because it will facilitate those opportunities down the line. But does it really make sense for what I call fractionalized players to come together and still create a small business? No, I need all of them to be breaking $1 billion, including Offer, so that when we combine, we have a head start. We're at 5 billion day one.
Yeah.
And look, I'm dreaming it might be that shareholders and everybody else has different ideas, but that's what's needed. You asked me what's required. We're going to have all these organizations. First, they need to be successful. I hope they all are all successful, and be that at some point we're going to have to come together to achieve scale.
Do you think there's room for a foreign player to enter the market who has that capital?
Yeah, and I know we're running out of time, but there's a really interesting concept that I like to talk about is this stakeholder alignment. Yeah. All the chips are with the shareholders today. Despite all this talk around, it's widened to stakeholders. We've got to do customers, employees and suppliers and all of that, and the environment and the government. Yeah. Everybody's a stakeholder. But the reality is who's got control? It's the shareholders. So whether you're foreign or not, the values have to be indefinite and perpetual. Islamic values haven't, the values are still the same. And that is the concern I have, that how do you protect the values? Or else you get the scenario where an organization set up for one thing, serve communities, and then ends up doing something else. And then it leaves people with a hole, which the fintechs will hopefully are filling, but then you've had that disruption. Yeah. You've had that disruption. And I think, how do you protect that? The ownership goals have to be a little bit more altruistic than just turning a profit, right? Yeah, it's got to be, yes, good for society, but it's about filling that requirement. And that when we talk about values and beliefs and authenticity, it's just got to be there. So if that foreign entity was owned by a waqf, a social waqf, where the perpetual values are protected, that might be, and it's very long, patient capital, that could be potentially,
What
the
a
way forward.
bombshell to end this on. I feel like that's a whole different topic in podcast that we need.
Yeah,
to
we
do.
could talk. I mean, there's a whole bunch of topics we could talk about.
Yeah, absolutely. But we are completely out of time. But Sultan, thank you so much. An incredible conversation. We'll have to have you back on at some point.
Yeah,
Yeah,
you're welcome. I'd love to come on again.
Amazing.
Yeah.
All right. Assalamu alaikum.
Wa alaikum salam.
Thank you for listening to the Muslim Money Talk podcast. If you like what you heard, then please subscribe to Muslim Money Talk wherever you might have been listening to this. Give us a like and share it with someone who you think might be interested. It really, really helps us out. Thank you. Assalamu alaikum, and see you next time.